Good afternoon, traders. This is Tony from easyMarkets in the Sydney dealing room. A few hours ago, we had the RBA meeting, and you can see the price of the Aussie dollar now shot higher. Um, Basically, what has happened here is that the central bank has removed a key little phrase that they had been using for a long time, basically patient in regarding the inflation and the effects, and they'll be patient for raising rates because they expected inflation to come back down. Now they started noting concern about some of the elements keeping inflation higher, noting that the Australian jobs economy is very, very strong. Uh, and in this mode, the market took that as straight up being as hawkish as they could in this election cycle. And you saw the immediate reaction of breaking out of the range that we've been in now for the last, say, well, almost since well, all this year, but almost since when we were back to the June, July. Now, when we fell down here, if we're talking about this rally, this was when the October meeting came in, and then they actually kept that patient in there. Everyone else was changing their tune. So this particular meeting at the same price, instead of leaving that patient in there, getting the market a little sad, we went straight in. Now this rally is also happening with commodities, so there's things that are driving this fundamentally. But the big change that we're seeing today is that the interest rate expectations of the bond market here in Australia starting to price in multiple rate hikes towards the end of the year. After the election coming up in a couple of months, then it's likely to be just non-stop rate hikes, similar to what they're pricing in the US and already Canada and New Zealand. But that relative change, and that's what a lot of the big moves in currencies happen, has pushed us into this new range. So this range of 75 to 78 is going to be our solid little range. And if we've broken above the top side, which we have done just now, um, of that 75, 75.30 level, then it's been the new resistance. All right. It Unfortunately, because this was a very fundamental based and a strong move in regards to um, the underlying bonds, right? So the bond market doesn't ask questions. It's like, oh, that's it. Given the indication they're going to raise rates, uh, all things being, what they currently project, then if they were going to push back, they were to push back, right? So basically endorsing what the bond market had been pushing in the weeks before this. So in the last couple of weeks, the interest rate expectations have been increasing, right? But they were a little hesitant to go ahead of the RBA. Now they have, right? Now, this means that 78 is the next big resistance, buying dips if we get them, but the dips should be very shallow. And you're going to see that. Why the dip's so shallow? Because it's not your normal technical move. You can't expect the market just to pull back all the way back to 75.50, say, as a clean little retest of a breakout level, when this sort of move is sort of built like the dollar yen move. The dollar yen move, when it started, interest rate expectations change, bang, 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 no pullback until it really overshot. Okay. So the same situation here is going to be with the Aussie. We're going to now press topside on the same driver, interest rate increasing until we run out of steam. All right. So it's by no means nothing's 100%, but if we're talking about that move up to there, it really just requires time rather than anything changing. Commodities remain strong, interest rates remain changing as they are, then that 78 is on key. To get back below 75, say, would require something new, something very negative, um, and something that changes the game with commodities and the outlook for Australia. It would have to be something very big like China at this point. The US dollar, I suppose, can arc up, but if we're talking about how much priced in we have already, it's hard to price in more rate hikes than the US already has. And at a certain point, it'll be hard to price in more Australian rate hikes, but we're not there yet. Okay, so they're playing catch up uh, with the RBA changing its tune now. Okay, guys. So if you're looking for entries, because 75.50 might be a little bit too big a pullback, then look for just 30 to 40, 50 pips from any high. So a pullback from 76.50 to 76 is as good as 76 to 75.50 when you're talking about profit taking. Okay, and it's a little bit. You may not get the big correction that you're looking for, but if you enter, and then you have some options. So maybe enter half size, and then if it pulls back further, you can enter your full size position with the same sort of knowledge that shouldn't go into 75. Um, but the immediate reaction may be a little bit more than you expect, given that it is that fundamental change. So the pullback may not begin until a little bit later tonight or tomorrow. It may actually even get to 67 if it's in an aggressive mood, uh, because it is such a big shift from our central bank, and you got to respect that when that happens. All right, guys, I'll be back with tomorrow. We'll update this as we're coming in. I like 75.80 if you're looking at an exact number. Um, it's just maybe 76 now will be the support, because since we've looked at 75.80, the market's gone up another 30 points. And, it just looks like it doesn't want to stop just yet as well with the Europeans as they've come in so far. All right, guys, we'll be back tomorrow with another trade idea. We're going to be looking at crypto. Uh, so keep an eye on that. And then next week, we do have the earnings starting from the US. So we look at JP Morgan, Meta, Twitter, some big moves happening in individual stocks. Cheers.